So I'm sure a lot of people wonder if I start investing in stocks every month, I take my extra money, I just put it into an account and I start buying stocks and they're growing and I do this consistently. How much money could I make? Would I make a few hundred a year? Or would I make a few thousand a year? What would it look like if I was consistent? Well, a new beginning investor just start off with $200, $250. They put it into an investment account and they consistently put away $200 a month for 10 years, growing at a rate of about 10% a year. They can expect after 10 years to have about $41,500. That's a profit of $17,000. And that's really on the low end. That's the average return for the entire market. That's good companies combined with bad companies. Year over year, they average about 8, 9, 10% a year. But what if you study a little bit, you know your companies, you know what you want to buy, and you bump up the amount of money that you put in every month? Say you put in $300 a month. That would be like $3,600, I believe, a year. $300 a month for 10 years, growing at an average of 20% a year. Some years you might be a little bit above that. Some years it could be a little bit low. It could be maybe say only 15% for that year. But your average is 20% growth a year. After 10 years, your account's already at over $14,000, with $78,000 of that being growth, being profit. That's the power of compound interest. When you continuously put money in an account and the interest is making it grow, it's exponential. It's not just adding on, say, $200 a month, $200 a month, $200 a month. It's adding on, say, $200 the first month, $210 the next month, $240, then $260, $300. The amount that your account is growing each month is also growing. That's exponential, and that's how your money grows the fastest when you're investing, because it's compound interest. Your money that you've already made is making you more money. So let's say you keep on studying, you study your finance, you study your trading strategies, and you become a little bit more advanced. Well, how much money could you be making at that point? Well, say you bumped up the amount of money that you want to put in your account each month. You put in $400 a month, every month consistently for 10 years, and you're getting higher than normal returns. You're getting, say, 30% a year. Sometimes more, sometimes a little less, but your average is 30% per year. After 10 years, you're already at almost $300,000 with a profit of $250,000. That's like compound interest at its best. At this point, you're making literally more than a couple $1,000s a month. You got to be making, let's see, from this, I'm seeing, let me check the calculator. Let me not just sit here and guess. Okay, so at this point, after 10 years, you're making $2,500 a month passive income, not doing anything, just checking in on your stocks every now and then and continue to buy stocks with whatever strategy that you chose. You're making $30,000 a year after just 10 years, and that's on the side. That's at the same time you're still working your regular job so that you can get your $400 a month to be putting in. You're making $30,000 on the side.